What's up, people? It's Any, aka the Knock Trader, and I'm back again with another live stream. All right, let me turn the volume down in this. All right, guys. I took a 2 week hiatus. Apologize. Let me see who's on the stream first before I get started. Let me say hi to anyone in the comment section. Leave me a message in the comment section, just to let me know you're here, and I'll get straight into the video. So, coronavirus has hit us hard, as you can see on the equities market. Before I actually get into the stocks, I'm gonna go through just a broad view of the macroeconomic macro view of the market. So I like to use FinViz just to take a kind of a wider view of what's going on in the wider market. So if you go on futures on FinViz, it gives you some of the top indexes and indices and top commodities out there, just to get a wide scope of how the market is doing. Obviously, I'm not surprised that even on the 1 week chart, it's just been a sea of red. Dow Jones has been down, S&P 500, Nasdaq, Russell 200, Nike, DAX. Obviously, the FTSE not here. Crude oil's down. I'm going to talk about crude oil a little bit in a second. Natural gas is down. Everything's down. Obviously, the VIX is up. As you all know, that VIX is inversely, well, it's not inversely, it is inversely correlated to the market, to the equities market, because the VIX index takes into account options trading, and whenever the market's down, institutional traders will hedge their bets by buying put options, and that will make the VIX index soar. But I want to cover that a little bit in a second as well. There's just over the last week and even the last month, it's not looking too good for the world economy right now, and we all know what it's because of. It's because of the CEV. I'm gonna call it the Roni. We all know what the virus is, but I'm gonna call it the Roni because apparently, whenever you say the dreaded name, I'm not talking about the beer. I'm not talking about a beer that's Spanish for crown. But whenever you say the name of the pandemic that's around the world, then your monetization goes down apparently, because the last video I made, monetization was down, so I can't say the name of it, so I'm just going to call it the Roni. But you know what the Roni is. You guys know what I'm talking about when I say the Roni, and I'm not talking about a jabroni. I'm talking about Spanish beer and a pandemic. If you know what I'm talking about, you know what I'm talking about. So that's what's causing the Roni is what's causing the world economy to start backsliding, because people are scared. Now, in my opinion, it's no worse than the flu. Only looks like, just based off the data that we're getting, it's only old people and people with compromised immune systems that are dying. But that doesn't matter, because at the end of the day, the media train has ran with it and people are scared, and all it is perception. If perception is big, then it doesn't really matter what the reality is. Then the perception will drive the narrative, and people will start selling their shares, and the economy will slow down, and schools are shutting down. And even my job, I had a day to work at home because people were just scared about the coronavirus. I said the name. I shouldn't have said the name. Damn it. It's gonna get, my monetization is going down now. Flipping heck. All right, cool. The Roni. Okay, it's too late now anyway. Hey guys. Hey Wayne. Hey Stacks. Hey. Yeah, I said it already, so it doesn't matter now. Hey Peter. What's up? Hey Demola. Yeah. So yeah, that's a little bit of backstory to what's going on in the market now. So obviously, with all this going on in the market, then it's the best idea would be to look for short positions, because everything's selling off. So it wouldn't be, you can find long positions, but in reality, it's going to be better to find short positions, because that's the way the market's going right now. So for the most part, last week was spent consolidating. It had a big downward move over the end of February, and then it consolidated most of last week, and now it's selling off again on the DAX, and it's doing the same for most of the other indices. So I want to go to crude oil first, because there's interesting. I'm going to go back and forth between some articles, and there's an interesting article I saw about OPEC today that I saw in one of my WhatsApp groups that I'm with some other people. So it says OPEC deal collapses, sparking price war. $20 oil is coming in 2020. So because OPEC, which is like it's a legal cartel of all of the main oil distributors, they normally dictate the price of oil, and because prices they normally they have like a cartel where they artificially control, where they control the amount of oil that they supply to the world economy, and they in turn that they will have control over the prices of oil on the worldwide scale. But if they don't agree, then they can all start price undercutting each other, and then it'll cause the price of oil to go down. So the fact that deal talks have collapsed means that they're not going to be working as like a monopoly, and that means that prices will probably go down. Hey, what's up, Kwame? Happy Ghanaian Independence Day. Atu. Alright, so oil prices are down 30% for the year as the new Roni, or I'm going to call it COVID. Yeah, COVID-19 slashes global. So yeah, once again, a byproduct of the virus, oil prices are going to go down. But so there's going to be oil prices going down. With previous agreed OPEC production cuts expiring on the end of March, Saudi Arabia and Russia can theoretically pump as much crude as they want. So experts are calling dramatically lower crude oil prices as major OPEC and non-OPEC producers prepare for an all-out price war. This might be actually a good thing for the world economy, because if oil prices are really cheap, then the cost of production of a lot of stuff will actually be cheaper to produce, and then there might be more trading, because right now the whole world economy is at a standstill. So that might actually be a net positive on a global scale, the fact that oil prices could potentially sell off. So this is the news. Now, what's the technical analysis telling us? Crude oil. Now, I've already plotted these graphs from previously, and if you watch on one of my old live stream videos, I actually plotted this Fibonacci retracement, and I said oil was selling off and it could potentially sell off some more. And what I did was that I drew a retracement from 592 down to 4942. Now, as you all know, Fibonacci is all about helping you to show where price may potentially retrace to as it's moving in a specific motion. So what I mean by that is that the overall motion was downwards for the price from about January up until now. Price has been selling off. So when price got from here to here, I saw this as an opportunity to draw Fibonacci, and lo and behold, it retraced back up to the 50% level. So from here to here, it pulled back 50%. So it went up 50% before selling off again. And not only did it tell you where it was pulling back to, it told you where it was going to sell off to. So it sold off pretty much near to the next Fibonacci level, and it pulled back pretty much near to the next Fibonacci level. So Fibonacci is such a useful and strong tool for predicting where a retracement might occur when the overall price movement is moving in one direction. So in this case, price was selling off, but to make a perfect trade, a trade that will minimize risk and maximize profit, rather than getting FOMO when price has gone all the way down here or go all the way down here and then entering a short position and then sitting in the red for a couple of days before breaking even a couple of days later, then making a profit, you can wait and then wait for it to retrace back to one of these levels. And when you think it's about to turn around based off of the level it's at, so if I go down to the 4-hour chart, when you think it's about to change direction, and there's a host of things that can help you decide when it's changing direction. For example, the 180 simple moving average is curving down. The MACD can give you an idea as to where it's going to change direction. The RSI, if it's overbought. So here would have been a perfect place to have taken a short position. MACD overbought. MACD crossing over. RSI overbought. Hitting the 50% Fibonacci level. So all of this would have been signs to let me know, okay, potential change of direction, and at which point you could take a short position. And because you're taking a short position at the point of pivot rather than just taking a short position anywhere you feel like, okay, selling off, so I'm going to take a short position anyway. If you take a strategic short position at Fibonacci level that you think is going to turn at, then you can almost time it to perfection, and that short position would mean that you'd be in the green for the most of your trade. So like for here to here, you would have been in the green, and that's 8 days, 1,000 pips. And then your stop loss could be pretty tight. So you could be setting a really tight stop loss and then be in the green for X amount of days. And then you could have done the same again here. Now, it wouldn't have been exact science because it didn't retrace all the way back to this red line, but it retraced close enough and it sold off. So based off of this information, there's an argument to say that if it continues to sell off, who's to say that it won't go all the way down to this next Fibonacci level? Because it's retrace is respect to this level, this level, this level, this level, this level. Who's to say it might come over here? It might not go all the way down to line, as I said. It's not an exact science. So what I like to do is that create a zone of profit as opposed to like a specific point. So let's say this would be the zone, like the profit zone. You with me, guys? Am I making sense? Oh, what have I done? Yeah, so this is the profit zone. So that's kind of like an area in which I would expect price to sell off to. Let me draw a more realistic yellow line because it wouldn't go down so sharply. Potentially, it might take a couple of days. It might retrace back. It might be a couple of days. It might be a couple of weeks. We don't know. But that is my next prediction. As you said, that article said it might go down to 200. But you know, articles are in business of fear. Fear sells. So if they think it's 2,000 may be quite a tall order for it to sell off to, but it's not out of the realms of possibility. But as it stands, it's been selling off for quite some time, and all motions lead to the fact that it could continue selling off unless something changes with regards to the coronavirus or if OPEC strike a deal. So there's two things that could potentially change the direction of the crude oil. If OPEC strike a deal, and then if coronavirus cure is I've said it again, it doesn't matter. If coronavirus cure is found. So yeah. Demola says, do you think the rise of Corona beer will lead to a global recession? Yeah, Corona. Okay, would the rise of Corona beer lead to a global recession? All right. I think it could potentially. I think the Roni, as we call it, I think the Roni might cause a recession because. I've said this again. I think a recession is going to happen at the end of this year. But the situation that we're in right now might be a catalyst for a recession to come a little bit sooner than expected. Because right now, markets are selling off. And it seems like there's no sign of them letting up. Because this pandemic has become all right, out and out. It has really rattled the market and people are scared. And at the end of the day, when people are scared, they do irrational things and they sell their positions out. We lost in the space of 18 days, the DAX lost 17% of its value. And the 17% of its value, it took 5 months to gain what it lost in 18 days. And that's ridiculous. So that shows you how scared people are. Stacks, I've just given up, mate. I've said it so many times. This is probably going to get demonetized. I give up. So yeah, I do think it could potentially be a catalyst for recession because recession, the technical term of recession is 2 months of negative growth. And right now it looks like 2 quarters, so 2 quarters of negative growth. And right now we need a miracle for the gains that we've lost to be for us to come back, so that we can have some positive GDP growth. And I don't know if I see that happening because I'm hearing that it's going to take maybe up to a year for the Roni to get people to have a vaccination and a cure. So I don't know. Hey, Stacks thinks it's going to be a mild recession. I don't know about that, I think it's going to be a big one. Stacks, why do you think it's going to be a mild recession? Let me type back to you. Why do you think it's going to be it's going to be a mild recession? I think it's going to be a big one. And I've got my theories on that, but I don't want to bore you with a whole video of why I think the recession is going to be long. But as I said, another way that you could capitalize off a recession was VIX. The VIX index. I remember I spoke about this in my last video. This was almost 3 weeks ago. And I think 2 weeks ago. And price was around here. And I thought I'd missed the boat. And I was so wrong because it carried on climbing. So this is the profit zone I wrote out for VIX. And lo and behold, it's nearly there. So if I had entered here, this is my story of my life. Just I predict things and I don't execute them, and then I'm just staring at missed opportunities. This yellow line in this green profit zone is one that I created at the beginning of January, end of January, beginning of February, and lo and behold, it's done. It's made a falling wedge here. It made a falling wedge here, and then when it broke out, it shot up. It shot up the way I expected to, because with falling wedges, a lot of times it shoots up at the pace in which that it came into it. So what I mean by that is that from this point here to this point here it took 2 months to go 2,000 pips. So I predicted it would go 2 months to go 2,000 pips again. And lo and behold, it's even going there at a faster rate than I expected. The minute it broke out this falling wedge, price just started shooting up. And the reason behind that is, once again, I repeated that the VIX is the VIX index is called the velocity index, or sometimes called the fear index. And the reason it's called that is because traders or institutional traders in particular buy options Yeah, Peter, it happens to me all the time. That's why I swear, if you guys traded what I speculated on and just you'd be rich, because I don't trade them, and I'm always, well, I'm not always right, but I'm right a lot of times, and the ones that I don't trade are pretty much go exactly how I want them. So it's just the name of the game. But yeah, I'm gonna make a Patreon. You lot can fund me so I can actually start trading this stuff. Uh, um, yeah. The VIX is all about how people can. It's all about how it's called a fear index for. It's nicknamed the fear index for a reason, because when people are fearful of equities markets tanking, they want to hedge their positions so that the money they're losing on equities they can make back by either shorting stocks or investing in or putting put options, which is trade a complicated options trading strategy where you make money on share prices going down. So the more put options that are bought, or even call options, VIX just measures how much options trading there are, and the velocity, and then the shoot up in the VIX is just all about how much options trading are being traded at a time. So during times of economic prosperity, when equities market is going up, the index isn't really doing much. But when share prices and stocks are selling off, it spikes. So that's when you see a spike, normally you can attest that to the fact that the equities markets are selling off. So now, because of this big sell off, this spiked up, and also because it's falling wedge, that was also a sign that it was going to sell off as well. Um, Now I'm gonna go to one of my favorite stocks. You know, the one that I've been ranting about for some time, Flutter Entertainments. Flutter Entertainment. So I've been talking about this for some weeks now, guys. I'm gonna go back to this. Flutter Entertainment is the trading name of Paddy Power Betfair. So when Paddy Power and Betfair converged or merged, did the M&A, merger and acquisition, they started trading under the name Flutter Entertainments. I don't know why, but yeah, that's why they trade it. And you know, Short Tracker is one of my favorite sites. What Short Tracker does is a website that shows you what institutional traders need to declare when they take short positions. So this website actually shows you which stocks all of the big hedge funds are or investment banks are shorting. Now, they're called smart money for a reason. Retail traders like us are called dumb money. I'm not dumb, but boy, I don't know about you guys. I'm joking. But retail traders are called dumb money for good reason. Because as you know, with all the trading platforms, they say 90% of traders lose money, 75%. So, but institutional traders, they have a higher success rate. That's why they're called smart money. So I was talking about for weeks how Paddy Power and Betfair are going to be in trouble now that this new gambling commission law has come in place, where they're restricting betting on credit cards. Let me show you. Well, I think I've shown you this already, where they're restricting betting on credit cards starting from April. Now that's going to really cut into the profits of these betting companies that rely on your career gamblers, all these people that are big gamblers. The way I compare it to the government's finding a way to stop alcoholics for drinking more than 2 beers a week. Do you know how many alcohol brands would suffer if their main demographic, the most profitable demographic, isn't allowed to spend as much as they usually do? They'd be in trouble. There'd be at least a short term drop in the value of these companies, and I think that's what's going to happen for this gambling on credit cards to be banned from April 2020. So yeah, with that happening, all the institutional traders it's now the second most shortest stock, Paddy Power Betfair. Now I spoke about this a couple of weeks ago before it even started being the most shortest stock, one of the most shortest stocks. So I feel like I'm ahead of the game. I think I'm smarter than some of these fund managers. But there's no point patting myself on the back. Got to short it. So now this is just the fundamental news. So I've given you the articles as to why I think this is good. I've given you the fact that the institutional traders think it's a good short because they're all shorting it as well. And you can even go into when they took their short positions. Some of them took their short positions as early as January. So maybe they caught onto this before I did. But still, I believe that there's more shorts to be taken. And if you look at it just from a fundamental aspect, it just looks like a selling off. I want to show you something like if but yeah, do you know what I mean? So Yeah, yeah, alcoholics probably would die from 2 beers a week because there'll be too much of a cold turkey. But yeah, so now just from the fundamental, from the technical aspect, I'll give you the fundamentals. Just look at it. It's been an ascending wedge. So this stock has been doing pretty well since about June last year. It's been 6 months of prosperity, and now it broke pattern. It broke out of this pattern, and then it tried to come back up, but it sold off. And then now this is a real key pivot point. Their earnings report is 7th of May. I think it's going to sell off in anticipation towards the earning reports. And remember, the 1st of April is when this thing gets enforced. So that's when that law gets enforced. But it doesn't matter when the law gets enforced. The fact that we all know it's going to get enforced now, it means that they're going to start and they're going to be in trouble from now. So I believe that it's ebbing and flowing. It's going up, coming down, going up, coming down, but it's making lower highs. And I believe that this is just the beginning of a really bad period for betting companies. I believe it's going to sell off, come up, sell off. It's going to do something like that. I don't know how low it's going to go, but I believe it's going to sell off really a lot. And then by the time it gets to earning reports, I think it might even come up. But I don't want to speculate that far ahead. But I believe that you don't want to wait till earnings reports because it will probably be baked into the price of the share by the time it gets to earnings report. And it will have too much of an effect. But I believe between now and earnings is when the share price of Flutter Entertainment is going to really sell off. So I believe this is a great short. And why I believe it's a great short is because, as well, because you're armed with this information, you can set your stop loss pretty tight. I'd set my stop loss around like something like here. So that means that you'd be risking about 900 pips to make potentially about 2,000. I don't know. So that's like a 2-to-1 risk to rewards thereabout. So that's really good. That's why I think. Fund managers had to speculate too. Yeah, it's true. Fund managers do have to speculate, but I'm sure they get more information than we do, or maybe they get information a little bit earlier than we do. And their success rate is way higher than us retail traders. Has really strong. Okay, so gold has really strong range trends at the moment because of the gold short-term shortism. Okay, cool. Let me look at the gold. I'm gonna look at gold right now. Gold. That's a Austin Powers reference, guys. The taste, the texture. Yeah, gold right now. Gold's had a good run. Gold's had a really good run. I don't know how long that run's gonna last still. As I said, the time to enter these type of stocks is when they've pulled back. I like to enter them during the pullback because if you enter something like gold now, who's to say it's not going to sell off? Who's to say this line here isn't a resistance that it can't break right now? And I wouldn't be surprised if it is right now. So the way I see it is that gold's, if you look at the wider scale, as I said, I did the Fibonacci for the same reasons why I did Fibonacci another one. If it's trending upwards, I don't want to catch it here. I don't want to catch it here. I want to catch it when it's selling off. So then I can catch it at optimal position so that I can buy it into the strength rather than buying it when it's quite overextended, when it's already had a pretty good upwards move. Because look at this. From here to here, it's gone up 230 pips in 2 months. That's quite a lot of big move. So how much more does it have to go? I don't like to enter position halfway through its move. So you have to be quite strategic with gold. We know the market's selling off, but does gold still have much more legs to climb, or are we catching it as it's kind of losing steam? And you don't want to catch something as it's losing steam because that's how you end up in a position where, like, you take a long position here and it starts selling off, and you're actually at the worst position to take a long because that was maybe where the momentum stopped. So the way I look at it right now is I look at it like, this has two things it could do. It could be a let me delete this Fibonacci first, just so that it's got two things it could do. It could potentially do that, sell off, and then that's like a little bit of like a double top, and then but it could be selling off and then trying to regain some traction so that it could break through it. Remember, I always say that it could just start selling off. I always say that, and then but that this sell off maybe it's trying to kiss the 180-day simple moving average. So it might be selling off just to this line, and then we can see where it's going to go. But the way I see it is that I do think it might retrace off of this and then try and retest it again, because a breakout doesn't normally happen the first time around. It takes a couple of times. Like if you look at it like here. If you look at it in hindsight, look at this. It probably wanted to break out once, twice, and then thrice it broke up. Same with here. Same with here. Look how many times it went to break out here. Breakouts take a couple of times. The way I see breakout is the way I see a sledgehammer. Every time it tries to break a resistance or support, it's like a sledgehammer hitting the glass. Each time the glass gets a little bit weaker until it bursts through. So here it was going once, twice, thrice, and then eventually shot up. So I believe that's what's going to happen here if it is to carry on going up. Yeah, exactly. I think it's a reliable double top. I agree. And plus, even if it's a double top, Peter, the good thing about the position we're at now is that it's a very low risk trade if you take like a short-term short. Because at the end of the day, if you take a short, this is where I would set my stop loss. I'd set my stop loss. I'll make it red. This is where I'd set my stop loss. I set my stop loss around here. I'll make that a little bit thicker so you guys can see. If I set my stop loss around here, that means, and then I set my take profit around, oh shit, what have I done? I set my stop loss around, I set my stop loss around here. That means that if I'm wrong, let's say that's 12 pips I've lost. If I'm right, I'm making about 96 pips. So what's that? 12.96. That's like 8 to 1. Something like that. 8 to 1 risk to reward, which is really good. So this is a good short where you're risking 1 to make 8. And at the end of the day, if I'm wrong, I'm wrong. I don't care. Because that's a good risk to reward that I'm happy to make. Because when I make one of these, when one of these goes my way, these 8 to 1s, I have to be wrong like 7 more times for to break even again. So yeah, Peter, it's a good trade to make just for the fact that the risk to reward is really good and you're catching the trade just as it's at a pivotal point where it could change direction. So yeah, I'm with you on that. And finally, one more stock I'm looking at. One stock I'm looking at is, this is a random one. This is one I found actually through my my 3-week consolidation screener. The screener finds stocks that are like consolidating, so stocks that are doing something like this. What am I doing? Do something like this. They'll be doing something like that, and then they converge to one point, and then they either shoot up or they shoot down. But they have to make a decision because they're converging on one point. So with that information, I love this one right now because, as I said, the market's selling off. So the smart way to think is that, okay, it's most likely going to sell off because the whole market's selling off. But obviously you don't want to assume anything. So let's look at the technicals. The MACD, look at that. Look at the shape of the MACD. This is just from experience. I can't really speak on it, but like the MACD here, it looked like a false, like it was going to break up, but it was going to sell off. And I believe it's going to do the same thing here again. And same with the RSI. It looks like a selling off. And if you just draw some lines on it, you can easily see that you got up here and up here. It's kind of like a converging wedge. Go down to the 4-hour chart. Converging wedge again. And it just looks like it's going to sell off. I can't really give you more than it just looks like it's going to sell off. And plus, once again, you're in an optimal position to really take advantage of the fact that it's at a place where if you're wrong, you're losing. It's a very cheap stock, so it's a very dangerous trade to make. You probably not even be able to short this. I don't know why I'm even looking at this actually, because it's like a pretty much near penny stock. I bet you're not allowed to short this, but if you could, this is 0.5, and you could make potentially that too. There's no point. I reckon this one you can't short because it's such a low value stock. Guys, sorry for wasting your time, but it's a good case study in wedge formations anyway, even though you probably won't be able to trade this. I'll check and see if you can, but I doubt you can just because of the price. You probably won't be able to short it, but if you can, I'm gonna short it. But yeah, that was me. I only covered a few stocks. I might make a video this week all about some of the stocks that the Corona beer virus has affected. But yeah, can you make a market order both ways? Yeah, you can. What you mean by both ways? You mean like a short and a long? Is that what you mean? Hard to borrow stocks. As Peter said, there's not many stocks that you can. There's certain stocks that you can't short on IG, but quite a lot of them you can. For the ones that I can't, I normally try and use something like eToro or something to short, like I did for my Uber trade. I shorted Uber on eToro when I couldn't short it on IG. But you can check that video out if you want to know, or my eToro review video. But yeah, enough of my ranting. We're at the 30-minute mark. It's Any, aka the Knock Trader, signing out.